Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is Friday. I hope you guys had fun during Powell's speech yesterday without me. But it kind of looks like this market is not giving us any reprieve yet, and I think we'll talk about our larger analysis here in a moment. But first, let's come and check the charts. You can see the Treasuries all moving to the downside at the moment. Let's roll over soybeans there. Pull up the volume profile. So here's the 10-year. So you can see here after Powell spoke, they spiked up, they spiked down. Pretty wild stuff. We were above 5% briefly, just briefly. And now you can see they are moving to the downside again. In the S&P 500, they weren't too happy with that, and so things ended up down. Now again, we've got a lot of gamma expiring, but I don't think the 4,400 is happening anymore, so maybe it's 4,300 today. But it is options expiration day. That's going to be a key factor behind what the equity markets do today. Here's oil. Oil's spiking yesterday. Not helpful. And we got silver and gold continuing to extend its highs. And so they, again, are not reacting to the changes in real yields. And then we come over here and there is a pretty big spike going on in Bitcoin this morning. That is curious. And we got the dollar still just around 106. So off of all of that, first thing I want to come in here and check what is going on with Bitcoin. That seems like pretty aggressive buying, that like there must be a BlackRock says Bitcoin market is unregulated, lacks transparency in new ETF filing. So could it be that? Could it just be that BlackRock filed another one? I don't think that's a very good argument, because the market is unregulated and lacks transparency. That'll just say the government will be like, okay, so when it's regulated, then we can have that. Oh my, somebody... Okay, let's see here. The 150 level in the JPY. So this comes back to the whole, how come the number that I get over here for the Japanese yen is wrong? Can somebody explain this to me? Here, I got it here. Why is it that 0.0067290 one over that is 148.61 and not 149 something something something? Why is the future price that I get so different from the spot price? Is there some sort of monthly expiration I'm missing, or? Well, let's check it. So if I come to cmegroup.com. That was an odd little tick up there. I noticed a lot of shifting around in the liquidity off of that. FX. JZ3 006727. So if I come back here, I do have a longer term 6J chart, don't I? I do. But see, that don't fix it. Cause like, well, it was last year around here that we saw intervention. I don't know. I don't know what to tell you. I don't know why the number is different. If I come over here to let's see here, trading view. For instance, if I get it out of trading view. Super chart. Morning Tiger, Walter, Octavius. USD JPY, or sorry, the JPY USD. Which way does it usually go? Well, I thought it was the USD JPY. There we go. FXCM, for instance. And they have 149.96. So yeah, I can't explain it. What if I refreshed it? No. When we looked at this before, it's just 1 over. So I can't explain that. Yeah, hold on. I think we can let you post one. Oh, I would have thought that you'd already be able to, actually. Okay, yeah, you try that, Octavius. You should be able to post a link. Oh, okay. Unusual whales. TLT. Holy shit, dude. It's a lot of calls, isn't it? And when was that? Yesterday. Lots of people putting on calls yesterday, huh? Okay, so let's, I got distracted here with trying to figure out what the deal is with the Japanese yen, but here's what I think is going on. Typically, the models that try and model like what the price of treasuries are from a fundamental perspective, will break the yields into two components. One is inflation expectations. I should do it with my pen. Hold on. Let's see here. Okay. Expectations. And plus term premium. Okay, so this part right here, inflation expectations. Inflation expectations, there's all sorts of indexes and stuff for. For instance, there's one of the Federal Reserve banks has an inflation expectation index that is a pretty solid indication of what consumers and everybody thinks inflation expectations are going to be. But this term premium, there's no way to calculate this term premium. Term premium basically ends up being current yields minus the inflation expectations. So this is like some unknowable extra term that everybody's just kind of making up. So when you come out here and you see all this stuff going on, and everybody says, oh, well, these changes, because inflation expectations aren't changing, these increases in yields are just reflecting a change in the term premium. And so they say, well, investors are demanding a higher term premium. Okay, well, who are all of these investors that can calculate what the term premium should be, which again, it's like a leftover term, so there's no way to calculate it that I know of, and are then outright going short treasuries because of this term premium? I don't know who these people are. And when you come in and you look at a chart of the treasuries here over the last month or so, it is just like relentless selling every session. And every time that it happens, here, they're really big sells too. And they seem to not matter where we're coming from or whether there's news on that day or what. And these people, they are all selling because of changes in what the term premium should be. I'm not buying it. You come over here and you look at the chart, right? They've been selling it like hyper crazy. Okay. So we got to go back to what we know. What do we know? Orders move markets. So if we're seeing a lot of selling out there, we need to figure out, where are these flows coming from? Who is it that is selling? And a really strong answer is that foreign holders, particularly the Chinese, have been net selling treasuries since basically late July. So we have that data now. It doesn't come out until much later after the fact, but we have data now to suggest that foreign holders, sovereign wealth funds, particularly the Chinese, are net selling treasuries. Okay. Now, why would the Chinese be net selling treasuries? Well, two things. One is that the US economy seems to be an anomaly in the world right now. Everybody is struggling, and their economic numbers do not look very good compared to the United States. Now, if the United States was doing so well, you would expect to see that change in inflation expectations, right? But even with all of the really good data that we've had, inflation expectations aren't really changing, and economists still expect things to slow down in the fourth quarter. And there's still a large number of people that believe that there will be a recession in 2024 and that we'll have to reduce interest rates. So that can't explain what's going on either, right? But because the United States is doing so well compared to everybody else, these other countries kind of have to deal with it because of how it changes their currencies and their interest rates, right? So China in particular has been doing very, very poorly. And as a result, the Chinese yuan has been doing very, very poorly. And so China has actually been coming in, doing intervention and propping it up. So while for the last, like, our whole lives, the Chinese have been net buyers of treasuries, over the past 2 or 3 years, they have been net sellers of treasuries. And apparently, according to the data, they sold quite a bit, between now and July, last July. Okay. The other possible explanation is that if China believes that they're going to invade Taiwan, then they know that their treasury holdings in the dollar could be weaponized against them. And so they're maybe doing what Russia did back in 2020 when they sold all of their holdings of US treasuries. That Putin had been planning this for a long time, apparently, because we did know that he had sold Russia's treasury holdings. And we were kind of like, well, we don't know for sure if that means anything, but if he was going to attack, that's probably what he would do. And what do you know? He did attack, right? So what does that mean for us? So what are you saying here? Sometimes it covers what you guys are saying up. But Powell said all is hunky dory. Yeah. So yesterday, Powell's comments I thought were quite dovish. I was surprised, first thing, because I was getting my colonoscopy done yesterday. Feel a lot better today, although I probably still look. I'm still not looking my best. Might take a few days to get back to normal. But anyways, when I first read the headlines, I was like, oh, so that's probably going to be good for the markets overall, right? But then I look at the way that the prices moved and everything, and it was kind of like, whoa, like that's pretty wild. You would say it was neutral. So I would argue that it was somewhat dovish, because he basically said it looks like we're on track to go to 2% now, which was not what they were saying in the past. So that was a significant change in language that is usually reflected, or not usually, is currently reflected in the language that we get when they do the release, the interest rate, the statement, the FOMC statement. This is language that's in the FOMC statement. So I think that makes his comments more dovish. That alone would make his comments more dovish. But here's the thing: are the people that are buying or selling, is the majority of the selling out there because the FOMC had been too hawkish in the past? No. I'd say that the Federal Reserve has been kind of a little bit dovish for a couple of meetings now, actually. And the flow that we know of that is selling is foreign holders, right? That's a flow that's not going to back up until you get to a point where they've sold everything that they need to sell, or something about the dynamic changes here that changes them around. Okay, so one thing that could change them around, by the way, is 5%. So at 5%, there are some people out there that would typically buy corporate bonds, for instance, certain pension funds and so forth, and they need to get 5% out of their bonds or out of their fixed income. And then the treasuries are 5%. So they go, oh, we can get the yield that we need by buying the government securities, which are less risky. So we'll just do that. So they shift their demand from buying corporate debt to buying treasuries. So that's why 5% does end up being a critical level where some supply and dynamics do change. Okay. But these foreign holders, they are almost certainly, in my opinion, a large portion of why the term premium component has been rising. It's because the foreign holders, sovereign wealth funds, etc., are selling, right? And so because of that, that dynamic may not change based on the level. There's, if China wants to get rid of all of its bonds, let me back up here. I'm trying to collect my thoughts. I'm sorry, I'm not 100% on today, I guess. But if China wants to invade Taiwan and they need to get rid of all of their treasuries, then it doesn't matter what level it gets to, right? They're going to keep selling until they've sold them all. So that's the first thing. If the second thing is that they're only selling because of, they need the money to do currency intervention, then they're going to continue to have to sell and continue to have to do that until the economic trends change, which is that, China catches up to US growth again. So that means that the Chinese could continue to sell until the next major set of economic reports. So will it go to 6? I mean, I don't think that I can make a prediction like that. I'm surprised that we got to 5% when we did, because it was only a few weeks ago that we were like at 4.25 or something like that. Okay, but a lot of analysts are like JP Morgan, Goldman Sachs, etc. are all putting out this technical level of 5% as a place that it could gain some support and that the treasuries could turn around. And there's lots of people that are buying, and you can see there Octavia is posting that link, which is a really good thing to note, that the options flow is extremely one-sided. People buying calls in TLT. But the flows that we know that are probably most likely to be responsible for this increase in yields, there's no reason for us to believe that those flows are going to stop. Especially if it's just the spread between the US economy and other economies, then it's going to keep doing that until the US economic data starts to reflect reality, which I'm not entirely sure it does right now. You get what I mean? Bill Ackman with his short, that's true. He was short the treasuries, wasn't he? Okay, who in their right mind would sell US bonds if they are in it for the long run, like sovereign funds? Well, sovereign funds aren't necessarily in it for the long run. To them, the treasuries are a utility that they can use. And right now, for instance, the Chinese need to use it. So how are they using it? They're selling their treasuries and then buying yuan with it to shore up their currency. Right? But I tell you what, this move that we've had, you can't get that kind of flow with just speculators and stuff. It just doesn't happen. There has to be the really big players involved to have that kind of persistent selling, because it's not just like prices move down. It's that there was very aggressive order flow accompanying it, because we had many situations where the liquidity was trying to absorb it as hard as they could. Like yesterday, before we left, there was levels where they absorbed more than 10,000 contracts and they busted through it. Right? The limit buyers aren't jumping out of the way of these things. So, where is that huge market sell demand coming from? The only set of players I know of that can create that strong of a flow over that wide of a time period are sovereign wealth funds. Never get bet against the US? Well, I mean, that's the thing, is I don't think that it's necessarily a bet against the US. It's kind of a bet in favor of the US. It's just a bet against US debt. When you say 6%, you know, that just brings me back to Mr. Man, I am really having a slow morning this morning because I should be able to remember names like this. The bond guy on CNBC who was saying that, yeah, you know, in the next 5 to 10 years, he could see the treasury yields going all the way up to 13%. And everybody's like, that's crazy. But I don't think it's that crazy. If sovereign holders can move us, you know, 1.5% in 2 months, then, you know, 13 is not all that far away. if everybody else starts to follow suit, yeah, it could really run. If we get another bout of inflation that causes other people to sell, then yeah, we could see some ugly stuff. Now, with all of that said, I have never noticed a flow that I thought was like a sovereign wealth fund doing their operations on a Friday. So I would think that we get a little bit of a reprieve here today, and so far it looks like we are. Just double checking here, everything. We cover everything. Yeah. So that's like my overall reading of the flows in the treasury market right now. Oh, so by the way, I got a note. Again, last week I had to go leave early for a class, and I will be doing that again this week. I'm also not going to be here on Monday. I have a funeral in Canada that I have to go to, so I will be driving back on Monday. How good are you with NinjaTrader 8? I'm the best. Am I the best? I might actually, you know what? I might actually be the best. If I'm not the best, I need to try harder. If I'm not the best with NinjaTrader 8, it's kind of like Frieza. You know how in Dragon Ball Z, and Frieza was like killed and everything, but then after he was reincarnated or whatever, because they needed him for the Tournament of Power, he decided to actually train. And then when he started actually training, he became exponentially more powered. That's kind of what I am like with NinjaTrader 8. That's okay. Can you do a backtest strategy using a one-tick chart? If yes, how far back? Yes, you can. And typically, I think last time I tried it, it was 1 year. So this is a problem. Okay, so like if you want to do a strategy where like you're taking one tick, right? Then there are situations where for you to know whether you would have hit your target or your stop first, you would have to use one tick data, essentially, underneath of it. And if you only get 1 year's worth of it, then you can't do a real backtest with it. Oh, yours crashes? Yeah. So I ran into that too. And in order to do backtests like this, I essentially had to have 32 gigabytes of RAM. 32 to 64 gigabytes of RAM for the backtest. Because what happens is these data structures. Oh my gosh, this is that we're going really, really deep here. Okay, in C# is a garbage collected language, which means that if you create an object as long as you're still like referencing that object out there somewhere, it's still in memory. And so what happens is they have like this main loop that's doing the backtest, and this main loop contains all of the pieces of data that you do the backtesting on. And there's not any kind of like caching or like switching them out or anything like that. And so if you want to do like a one tick back, or even just like an order flow based back test over a long period of time, it ends up using a ton of memory. And there can even be situations where even after the back test is done, it doesn't give all of the memory back and you have to restart NinjaTrader. So that is why I started to save the data to disk on my own, so that I could write my own kind of back test of that sort in Python and be able to do it to one tick accuracy and to have accurate historical level too. Well, I wouldn't say it's purely a NinjaTrader problem, because, you know, the amount of data that you get is because of your data provider, right? And I don't know if other backtesters have similar kinds of problems, but that is one problem with the NinjaTrader backtester that I've run into. That it was not intended for you to backtest one tick data or to backtest order flow data. And so the backtests that I've done on the order flow were not as accurate as I would like. Like, we were running them and they did really, really well in backtest. And then we'd run them live and they didn't perform so well. And then we went back and backtest, you know, forward tested those days that it had traded, and it gave me different trades than it did on the live. And part of that might have been the way that I programmed it. But in this particular instance, what was happening was the difference between what the data you get when you're doing it live versus when you're doing it with tick replay can be as high as 5 to 10%, which for our purposes, like discretionary trading, is completely irrelevant. But for that particular robot, that was like just on the threshold that it was getting noise and the backtests weren't accurate. So that's why I kind of stopped that project in 2020. Stopped that project and I started recording the data. Or I guess it was in 2021, 2022, because I started saving the data in 2022. I have the same haircut as Frieza even. I mean, if I let the hair grow out, I probably would look more like a Vegeta with the receding hairline, but I personally think I'm a lot more like Vegeta than I am Frieza, but you know, we're gonna compare myself to Dragon Ball villains. But yes, I've made Ninja. So another thing that you can happen is if you do a optimization backtest and you have too many iterations, it tries to save the backtest data from every one of those iterations and it goes into memory. And so there's a setting in NinjaTrader for this strategy where you can tell it to not save the individual strategy data, and then you can run that kind of a backtest, do the optimization, and then switch it back when you're just doing the one. You know, like you can do something like optimize it on 1 year and then take the best one and then do that 5 years forward, but that almost never works. Almost always the ones that you do 5 years forward after that don't perform correctly, that you overfitted basically. So anyways, I think it's funny, you know, people will say like the NinjaTrader backtester is not very accurate, as I've heard people say that. But all of the backtesters have these problems if you don't know what you're doing. That's why if you're going to do backtesting, NinjaTrader has a page about the backtester and how you can program it that warns you about, where the issues are and where you could potentially fool the backtester and other things that might make your results unrealistic. And you should absolutely read that or whatever page they have for the other platforms that might be out there. So understanding what it's doing under the hood is kind of an important thing, because there are pitfalls. Like people have a tendency to optimize towards strategies that will take trades in fast action. And so you've optimized on trades that won't work live. Right? Vegeta is a very popular spice in Croatia. What? How do you read the options gamma? So to read options gamma, you would want to get a service like spotgamma.com, and they will give you information about the gamma, including key expiration levels and prices at which the gamma potentially shifts from positive to negative. So I don't know if we're positive or negative gamma right now. I would guess that we're positive gamma, but which means that we would get pinned going into the end of the session, probably at 4,300, something like that. Let's see. I have a bunch of tabs open here now. I should close that. Oh, that's right. So somebody asked this question on Reddit the other day. If retail traders are a small percentage, then why are there such violent reactions at key intraday levels? And I explained that, the minority of participants can still have an impact on the markets. And this person says, I've thrown insane size at the right moment and watch it get gobbled up. And I've had other times where I could fart and the market moved the standard deviation. There's no square root law. Well, but that is how it works. It says there's no square root law of market impact. That's just not how it works. But that is how it works. You could take any data set where you have order flow, where you can see who it's coming from, and it will always follow a square root law, broadly speaking. It's a pretty solidly proven stylized behavior of markets. Let's give him a link here. The interest rates is spoken by Rally. It is a little curious how all of the sudden, because the whole thing had been like the interest rates are going higher and like the market was ignoring them, and there was like this divergence, I guess you could say, between what the yields were saying and what the equity markets were saying, and everybody was like, "Oh, this doesn't really make much sense." And it's only been this last week, really, where the rates really actually started to weigh on the equities, huh? And so I find it kind of curious that they had to get to that point, and I wonder why it was that particular point that did it, but whatever. Put wall 4,000. Okay, so a put wall at 4,000 means that there is a lot of people that would have to potentially hedge their positions by buying if we move below 4,000. So it would take a tremendous amount of sell demand to keep them below 4,000, because basically all of the market makers have to buy there if it gets below it. So that becomes like a really strong wall of support that would be difficult for them to move away from or to move below. But like I said, I mean, 4,000, that's really far away. That's not going to be applicable today. But I'm going to bet that there's a lot of gamma to expire at 4,300, and there's probably more at 4,300 than there is 4,250, is my guess. So the most likely scenario today is that we close somewhere around 4,300. And if we don't, then it ends up being like a real bender of a bad move, right? Banks have some low cash flow off balance sheets, which are non-performing. So I'm not sure where you're going with that one, but here's something I was thinking about yesterday that we didn't have the time to talk about. This whole time with the banks, you know, I've been saying, well, the banks aren't doing that well because spreads are really small. And so, yes, banks make more money when interest rates are higher, but they also make more money when the yield curve is steeper. And so what we need to see is eventually we need to see the yield curve steepen back out, which it could do without a recession, and it has been doing. So that was one kind of thing that we had always been looking for, talked about could happen, and it did actually happen. But it's not really helping the banks all that much, is it? And so apparently the reason why is because people had so much debt at lower levels that the banks aren't actually putting out enough loans and actually making money from those higher interest rates and steeper yield curve for it to matter to their earnings. I think that's why. It's a little frustrating because, like, here we're getting like the storm that should be good for banks, and it's not actually happening that way. Higher? Well, who said higher for longer until 2025? The dot plot still kind of suggests that they're going to start decreasing rates in the second half of 2024. And more broad, I don't know. I haven't seen a poll since all of this economic data came out. But before all of the economic data, there was something like 80% of CEOs were expecting a recession in 2024. Can you believe that? Yeah, their balance sheet has duration risk. Just wait, Bank of America has 130 billion of risk, which the regulators are fine. Yeah, it's just not. It's like the higher yields and the steeper yield curve should be good for them, but other factors are weighing them down, essentially. And I think part of it is how quickly rates changed in particular seems to be hurting them. I don't know how we get out of this, to be honest with you. So, like, with the housing market in particular, everybody's complaining about housing, especially in Canada. I don't see any way out of this. Because if interest rates do start declining, the instant they do, people are just going to rush into buying houses again. Like, if we do get into the higher for longer time period, but it's like, well, yields come back because they're not going to be increasing interest rates. But they just stay there And so like the increase in yields that we've seen recently kind of goes away, and that extra premium that the mortgages have over the treasuries kind of goes away a little bit. And that'll bring a lot of people in. And if they start decreasing rates, then that'll bring a lot of people in, and it'll just push the prices of houses even higher. So what do you do? Because you've really like just absolutely decimated the housing market. Like hardly anybody's buying or selling right now. But the people that are in houses, they got low enough rates and everything that they're distressed sellers. They're not out there, and you would absolutely have to just decimate the economy. You would have to have a really, really wild recession to create those distressed sellers. So I don't know if there's any way out of the housing crisis part. Yeah, if they had to mark to market them, their cash flow is true. You're right. I mean, all of the banks. I don't think that that's as major of a factor for the big banks as it is for the regional banks, but I'm sure that it's still enough of a thing happening that it's part of why the banks are acting the way they are. But the thing that was interesting is that the decline in the bank stocks this week, I don't think necessarily were connected to the interest rate changes. I think it was kind of more, or at least where it really came in was when, who was it? I think it was Bank of America, that their earnings were really bad. Because the other ones that were reported before that, like JP Morgan and Goldman Sachs, were generally pretty okay. So it seems like they're kind of concerned about the banking space itself, possibly. I'm closing tabs here, and I'm just remembering that Bitcoin was up really big today. And like when I go to r/cryptocurrency, the only headlines I hear are related to a cryptocurrency ETF. And I find it so odd that all of these people are so convinced that there's going to be an ETF when the SEC has been doing absolutely everything it possibly can to make it not happen. Let's see what the regionals report in the days. Yeah, it will be. And I mean, the funny thing is that we're already, next week is kind of the quiet week where you're going into the month end. And then the week after that, we're back to jobs report again. So I don't know if I expect October to be a weak jobs report, but if we're not getting a weak jobs report by like November, then the market's really going to start flipping out, right? I think I said that a couple of times about a few jobs reports back, though. So I think I remember saying, well, if the September report isn't bad, then the market's really going to flip out. And it did really flip out. So I guess the further we get from that, the worse it gets, maybe? Yeah, could be. By the way, even though we've seen a decent pullback here and buy in the treasuries, I would say that the order flow has been pretty lackluster in the session so far. I guess because I do have to leave early, I'll leave the stream going so that we can record the order flow, but it's probably probably not a trading day for me. We can come back on Tuesday and maybe the volatility in the treasuries will still be there and we can catch some swings, but I guess we wait for the 10 minutes for the S&P 500 to open and see where it goes from there. I'm reading around here on Twitter to see if there's any headlines I missed. Another thing that I keep seeing like references to are like problems with cryptocurrencies and terrorism. So again, why would a Bitcoin ETF be more likely and not less likely after the whole Israel thing? Okay, I am hearing stuff also about Israel and Hezbollah exchanging fire. Oh, hold on. Is today the day they drill? What do you mean by drill you? That was just the doctor's office checking in on me after doing the what do we call it? The endoscopy. What is the more common term for this? Colonoscopy. Yes. Oh no, I did the colonoscopy was yesterday. Yeah. I passed out again. Well, I don't think I fully passed out. So like I've had some times where I pass out and I'll have like crazy dreams, and to me it seems like I was out for like hours and it was actually only a few seconds. Whereas this one, I definitely felt like I had blanked out, but that I had immediately come to, and so I don't think that I 100% lost consciousness on it, but for some reason. And you said, yeah, of course. Have you ever had a colonoscopy? It's not like that. the reason that a colonoscopy sucks is because you have to clear yourself out. They make you drink, Gatorade with Metamucil or whatever it is in it to just completely clean you out. So that there's nothing but liquid in your gut, essentially. And you can't eat for basically a day and a half. That's why colonoscopy sucks. But like the actual going up inside of you and everything, like they knock you out before you do that, and you don't even notice that anything had happened. Like you don't wake up and are like, oh, I feel my butthole was violated, or it's not like that. Although they do, for me, they'll usually come in and take samples and stuff, which they did this time as well. And so there is usually a little bit of, like when you go to the bathroom, there's a little bit of red. First time you go to the bathroom after it, but other than that, you don't notice. Yeah, but it looked pretty good. When I looked at the pictures, there was no colitis, which there has been in the past. So colitis meaning like ulcers, or other kinds of like wounds or damage in my colon. We're doing pretty good on that mark. But you can see irritation. You can see that my colon is like inflamed in places. So I definitely still have the problem, but we have it under control. But yeah, anyways, for whatever reason, sometimes when they stick me, and it's usually after I've been stuck for a while. Like this time, well, not after I've been stuck for a while, but it's not like them sticking it in or me seeing the needle makes me pass out because I'm afraid of the needle. But it's like when the needle's inside of me and my body feels that, it like flips out and goes into shock. And I'll try and fight it. This last time I tried to fight it, I fought it off once, and then I thought it was okay, and then it came back stronger, and then I passed out. And then your blood pressure plummets, and all of the blood sucks back up into you, and yeah, it sucks. But I'm kind of wondering if next time, if I should just go with it. I should just be like, okay, I can kind of feel it coming on. I'm just going to let myself pass out. Will that make it easier for me or worse? But the nurse that I had did a good job. So it was good. Because I've had times in the past where it's like the nurse just was like terrible at sticking me, and it wasn't a good experience, but this was. And then I always try to eat healthy afterwards. So I found a Mediterranean place, but the Mediterranean place didn't end up being as healthy as I wanted it to be. It ended up being like gyros with fries on it. So I had a gyro with fries. This is what we call Utah style, I think. That's the thing. You want like the unique food thing in Utah that, if you're going to get really gluttonous food, what is it going to be? It's going to either have a lot of pastrami on it, or it's going to have fries on it. Or both, like the machine gun at Bruges. Oh, so we did push a little bit higher there, didn't we? How much could I have made if I had taken a trade there? No, it looks like it's only $10. So I'm a little concerned about like trying to go along with this. Like, how long is it going to take? Will I actually get anything from it? And also, I have been stumbling over my words and everything, so I don't know if I'm really very on today. And it's going to be a long weekend for me, so I don't want to ruin the weekend. I should try Vegeta. Oh, okay. You know what I really like to get. Jay Braithwaite says Bruges is fire. Yeah. it's a waffle place, and they have twice fried French fries and like 12 different types of fry sauce. Do you know, I was at the supermarket the other day, and Heinz has mayo chup now, which is a combination of ketchup and mayonnaise. I'm like, what? They call it mayo chup? Like, it's just an affront to all Utahns. I feel they're appropriating our culture and not giving us any credit. It's offensive. It's offensive. Pastrami with fries on a toasted roll. There, yeah, that's exactly that's exactly what they do here in Utah. It's a staple of Croatian cuisine, which is a part of Mediterranean cuisine. Well, so the reason I'm getting in on Mediterranean cuisine is I suspect that my wife has insulin sensitivity problems. Because I was like, well, you know, I thought that it was just like, well, when you're eating like really sugary stuff and just not eating well, you know, that is going to reduce your insulin sensitivity and cause you problems. So she's like, well, I don't know what that is. So then she read up on it, and she's like, oh, I actually do totally have like all of those symptoms. So she's like, maybe I'm having problems because she wants to get on those GLP weight loss drugs, because ever since having kids, she was fine before we had kids, but then ever since we've had kids, she's had trouble getting back down to where the weight that she needs to be. So she wants to use those drugs, and I'm like, well, all those really do is like suppress your appetite and let the food go into your system more slowly. So like probably the way that you're eating and your insulin sensitivity are a factor there. So now that she's gone through that and she's like, oh, maybe I do have it. Now I'm like, oh, so we need to like shift our diet. That means you do the Mediterranean diet, right? I think so. But like, I haven't eaten anything Mediterranean. Usually I will go for the Korean with the kimchi. Like anything that has like the pickled, you know, sauerkraut, kimchi, etc. because of the bacteria in it is good. Anything to try and improve my gut bacteria, even though I'm pretty convinced at this point that that's not necessarily what causes it. My problem. Deep fried pickles is all I can think of now. Did you guys not have breakfast? Am I making you all hungry talking about it? You enjoy carnival or state fair foods? No. Giant chicken leg. That reminds me, I saw an interesting thing this morning that at the Saltair, which is the big concert venue that we have here in Utah, they had a problem, like a water leak or something like that, and they can't use the facility. So the big local rave company producer is they're gonna do it at the state fair. I don't know why they wouldn't have done it there in the past, but yeah, they're gonna do it at the state fair, which means better parking at the very least. At the very least, it should mean better parking. But that's gonna be interesting. It's 3:30 here. So it's about time to start thinking about what you're going to eat for dinner if it takes a long time to make, huh? Yeah. So I think what I need to do is I need to get like a Mediterranean diet cookbook or an insulin resistance cookbook or something like that, and just take over the meal planning. Because my wife never seems to want to do it anyways. I can pick. You and the girls will cook it. I'll watch the babies work out. Ask ChatGPT for some recipes. Yeah, because the problem is, you know, you should be able to find recipes online. You should be able to find all this stuff online, but it's just the quality of the stuff that I find online doesn't seem to be very good. And I mean, have you guys noticed this, especially over the past year? I think it was Wired magazine that coined the term "shitification." I am definitely seeing shitification of the web. It used to be that I could go online and I could search for a recipe, and I would find the best possible form of that recipe you could possibly make. And now if I go and I search for a recipe, I will get so many hits, and so many of them are like not what I'm looking for at all, or are just complete nonsense. They're just trash. Like, no, they didn't even like try the recipe themselves. They just, just like the content that you get is terrible. And now what's happening is people are lazy, and so they're letting ChatGPT write the things for them. So now you're getting like AI on top of AI. It's terrible. And so I have very much moved towards, if there's something that I need, like meal planning, to go and find a professional for it and buy a book, or pay some money for it, because the free stuff is so bad now. Because, I mean, that's what it's been in trading, is when you go and you search the internet, or you're on YouTube, the videos that they give you about trading are like objectively harmful. Oh, that reminds me, I should do this. I was doing this. Okay, what was it? Somebody sent me a link for a video yesterday that was like, here's a 5-minute strategy that can make you $1,000 or something like that, And because I watched that video, YouTube started recommending trading videos to me again. And all of the sudden, it like, I figured it out. It was like, oh, the people that want to make, are attracted by make $1,000 in 5 minutes, and they click those links, and that's where all of the traffic is going for the terms day trading. And they don't send, my audience doesn't get sent those, essentially. It doesn't associate my audience with that, because you guys don't click on that stuff. You guys see that stuff and you go, oh, this is bullshit, and you don't even watch it. So what I need to do is I need to make a clickbait video. I need to make a video that is, here is 5 strategies that can make you thousands of dollars just sitting at your computer for a few minutes, right? And then look at some of these strategies that other YouTubers have made. No, I'm not going to call them out by name or anything, but just look, back test those strategies and show the problems with them. And then maybe it'll pick it up. It'll go, oh, okay, this day trading audience should be sent to Seth. That maybe that's what's going on with the algorithm. Like, because the one that I saw, let's see if I can find it. I think I have to switch my account. I think it was on this account. Because the one that I saw, I think I can remember the name of the person. It was a girl. It wasn't Humbled Day Trader. It was like, what would her name be? Oh, here's day trading as one of the topics it has for me. Oh, look, there it has. It does say that because I watch myself, obviously, so it picks that up. Do this and quit your job in 90 days. Oh my gosh. RSI plus SMA. This is one of those things where it's like, why do people believe those things will work? And all of these have like 190,000 views and stuff. It's just crazy. It's just crazy. 100K trading strategy I wasn't gonna show you. You get a lot of Lux algo shorts in my shorts feed. Oh, you mean YouTube shorts? You'll be the one to break the retail noobs out of their bubble? I wish. Because I think one of the things that kind of got me thinking about this was like, I have a lot of people recently. Like here was somebody, this guy Nolan's. Thanks for the programming tutorials. You have a brain and it separates you from the noise of average scammers. I love your content taking perspectives many would disagree with. Sincerely, a programmer. I didn't even know what to say about it other than to just heart it. I was like, you know, the people out there that watch this content and see the value in it and see how it's different from everything else out there, it is there. Like the content is good. We just haven't figured out how to get the YouTube algorithm to agree with that, right? So that's why I was like, we need to clickbait them. We need to say this is going to make you millions of dollars, and then we'll get into the video and we'll be like, actually, no, you got suckered. Stop clicking on videos like that. Let me show you why. How to read order flow. I could probably, this one, he's got a you know, maybe that's one that I should put on there too, is like footprint charts, because the setups that people do on footprint charts don't work. But although those ones, it's another one of those, yeah, but it's kind of hard to come by the data and stuff. But I could do it on the S&P 500, I guess. I guess I could write it out and do it on the S&P. Why do people believe Jesus will come back? Why do they believe in technical analysis of atheism? I've found that videos posted 7 to 8 years ago are more informative than the stuff posted these days. Yeah, I feel like that the YouTube over the last few months has just gotten even more clickbaity and scammy and yuck. I really think, we were having this conversation in Discord a little bit, you know, because they're saying, well, you know, if that's what people want, then that's what the YouTube algorithm gives to them. But I don't think that actually is what they want. I think that the choices that are presented to them matters a lot. And if they were actually being presented good substantive content that you know, that would shift and that they would change their viewing habits if they were getting it recommended to them. But the thumbnail in particular is such a large part of how YouTube's system works. And that's kind of the linchpin, is basically it's overfitting to one thing. It's overfitting to one thing. And then they say, well, yes, but that's what the data says. And it's like, well, yeah, because your model is crap. And this is just always what happens with machine learning and algorithms and things like that, is that they get abused because the people that are making the decisions often just don't understand it. When are you going to trade? Maybe Tuesday. I really should be long here, huh? I really should be long here. I mean, I could probably, you know, catch this right here, for instance. Easy peasy. The synthetic dollar index is that chart towards the bottom of the screen. That's where machine learning has its downside, that it still requires human input. Yeah. Well, it's, you know, there's overfitting and all of those sorts of problems. Ugh, it's giving me so many ICT. It's giving me so many ICT things in that. You say it's not accurate? It's accurate based on what the FX futures are. I don't know. It seems to me that the FX futures has some sort of spread between them and like spot Forex numbers. Because the Japanese yen that I'm getting is 67305 right now. 0067305. And that puts the Japanese yen at 148.58, USD JPY at 148.57. But apparently if you go on to the spot Forex, it's closer to 150 right now. So I don't know what that's about. There you go. Easy trade. Easy what? $300 or something like that? How much was it? Oh, it was only 62.50. I thought it was going to be 128. Easy trade. That close to it, and with that much volume, with that much momentum behind it, they're almost certainly going to get through 106 at least. But now you probably should see a little bit more liquidity in this area, so that might kind of slow them down. Does investing.com actually have a live feed? Let me see. I wouldn't be surprised if the numbers themselves were different, but the chart should look all the same. Investing.com/currencies. Let's see. Continue with Google. Is it actually gonna sign me in? Indices, dollar index, and they say 105.987. Won't let me click on it so that I can get like a chart or something like that. Oh, wait, actually it did do it. Okay, well, you can see in here. Wait, can I change it to just 1 day? Well, it's kind of hard because you don't get the same amount of granularity as my chart, but the charts look the same to me. Yep, here's this spike right here. Here's this spike right here, coming down. The charts are the same. It seems like that there's a spread. There's like a spread between like the Japanese yen. So here, let me show you. Trading, if I go to trading view. Yeah, the chart itself it looks identical. It's just the prices are just slightly different. Okay, so there was some pretty aggressive buying after they broke through 106, but they are kind of showing that signs of like filling out the liquidity hole and stuff. You might sometimes, when you get this sort of a thing, sometimes will see another little spike that you know, like they'll push new highs again, but then eventually settle back at 106 in the end. Okay, anyways, products, charts. Let me fix my dollar index here. And I'm gonna bring the Japanese yen over. Right, so it says that the Japanese yen is 149.907. So what I do is I take the 6J, which is 0.00. Here, we'll test it here with a calculator. One divided by 0.0067315 is 148.56. But when I look at USD JPY, they're 149.897. So what's the difference? If I could go JPY USD, that only gives it to me on the ICE exchange, though. Let's see, on the ICE exchange, although it does look like the data it's giving me maybe... Oh, no, it's live data. It's giving me live data. Okay, so why is it on the ICE that it's 0.00667, and on the CME it's 0.006731? There's some sort of a spread there. And if there's a spread there, then which one matters? So I'm guessing that because this is a future with an expiration, that there's a basis involved in there, right? That's what I think is going on, is that there's a basis. And since everybody is watching this spot rather than the future, you know, we don't know exactly where they are. So in order to fix that, probably, well, kind of maybe arbitrage potential. In the early FX days, the spread was horrible between each exchange. So I think that what we can do, so I think that you would need to do something like, how many days are left in the contract, and based on what the current interest rate is, what should be the basis difference? And then you could factor in that basis difference to try and get a number over here on this bottom indicator that was a little bit closer. Is I think what we would need to do to get it closer, if that's really what it is that's causing the problem. Because I don't know for sure. That's just my guess. It seems like the most likely situation, because that's always the way that it goes with a future, right? So that there's always a basis difference that decreases as you get closer to the expiration. But, so you say arbitrage potential. You could do a basis trade with it. So it seems to me that it would be more realistic for a retail trader to do a basis trade on a currency than it would be to do a basis trade on treasuries, right? Because to own the spot treasuries, you have to have a pretty big wallet to do the basis trading, right? Okay, so like, we've talked about this, G-Wee. Well, I'm gonna start talking about this. You're gonna be like, oh yeah. So like a basis trade is, let me close that. I'm gonna close that, even though I always seem to regret closing those when I do it. And then we'll use the yellow here. Okay, so a basis trade is where you have, I buy actual spot treasuries. I buy. And then over here, I sell the futures. Okay. So the futures will factor in what the actual spot is at this time. We'll factor in what the spot is plus holding costs. Holding. So that means that, like, if I have to borrow money and all of those sorts of things, then it costs me a certain amount of money to actually even like hold this, essentially, right? And so what ends up happening then is, depending on the market, so if normally you would have backwardation, which is that the futures price is lower than the spot price, essentially. And this difference right here is called the basis. So what you do, again, is you buy the spot and you sell the future, and you make this difference right here. And we call it is an arbitrage trade, yes, but we call it a basis. It's a basis trade. And eventually what will happen is these two data series will eventually converge on the expiration day. So if you take this trade and then you're able to hold it to the expiration, then you make that basis difference. The only problem is that things can shift around on you. So for instance, in the treasuries here, there's something called the cheapest to deliver. So you might have the cheapest to deliver treasury that you can deliver. So you can buy that spot treasury and you can sell the future. But then the futures, the interest rates rise so much that the cheapest to deliver changes. And so now when things move around, you're actually losing more on your future than you are making on your spot, or vice versa. And so you actually have to add treasury contracts to make up for that change, because the cheapest to deliver is a slightly different bond now, right? Or something happens like the loss that you're taking on your future is larger than the amount of margin that you have in your account. So even though you can cancel it out on the other side of, you're making money in another trade somewhere else in another account, you get kicked out of the position, right? And then you could lose a lot of money that way if it happens too early. So there are risks to it. And what kind of happens is this basis trade is an overall consistent winner, except for that one time in the cycle where things get crazy. And then you lose everything. You get stopped out of your trade and you blow the account. It's what often happens. And this is how some famous funds have blown up and stuff. The forward would help the carry cost in their currency differentials. Brando says that an arbitrage strategy on a currency would require you to have at least 250k to make it work. Okay. I don't know. With the way that was looking, couldn't you just take one on the Forex and one on the Treasury? I guess I would have to look at what the size is on the FX futures. That's like, well, so right now, you can remember that the futures switched over in September, right? And they don't switch again until December. So the spread right now is relatively large. So once we get into the end of November, then presumably our 6J and the Forex USD JPY will be closer. But for now, on the dollar index, I personally am not looking at like specific prices. So this is not a problem. it doesn't make the indicator any less useful to us. Sure would be nice if we could sort out those differences, though. Oh, Brenda's talking about something more complicated. I don't know, it might be worth something for us to try sometime. Is gold up above 2? Ooh, it's just briefly. Do you think, so what do you think though? Do you really think that it's just Middle East risks? Because I think it's more than that. Took another war for gold to come alive again and save it from dropping lower. Because I'm kind of wondering if there's not some like if there's not some save myself from inflation coming back into gold as well. Because the whole thing was in 2021, you would have thought, okay, we're having inflation, so you buy gold, and then when the real yields kept going higher, the gold just got slaughtered, and it didn't really go anywhere, and now all of a sudden it's changed. Like the yields are going higher, but gold isn't dropping, gold is buying, and so you could say for sure, yeah, it's just because of flight to safety over concerns about a war in the Middle East. But, we don't really know that that's all it is, But either way, there has been a change, hasn't there? There has been a change, and I am glad that I kept my silver position. Took a long time, but it is helping. But the thing is I'm still not. I don't see this turning into something that really has long lasting geopolitical implications. I think that they'll take pot shots at each other across the border. Israel will destroy the underground passageways in Gaza. And then, I think that there will be permanent political considerations from it. But I don't think that it fundamentally changes the geopolitical landscape in creating like World War III or something. Depends if the other Middle East countries. Well, if the other Middle East countries like actively, send tanks over the border, then that would be different, right? But would they really do that? They can't be that dumb, are they? Like, I think that the presence of 2, if not 3, U.S. carrier groups in the region should be enough of a deterrent that nobody will be dumb enough to start sending tanks over the border. I don't completely trust Peter Zeihan. If Peter Zeihan says something about demographics, then he's probably right, but when he goes beyond that, he is completely off his rocker. Just remember that his specialty is demographics. Like when he was, because his claim to fame is that he was an analyst, or he would give, the FBI would ask him for reports and he would make it, or the CIA or whatever, that he was a part of the geopolitical apparatus in the United States, essentially. But his specialty, the reason that they were asking him about those sorts of things was demographics. And is one of those cases where when somebody gets famous, they always go beyond their area of expertise, right? They all do it. Drives me crazy. It's just like when Jordan Peterson, he's primarily psychology and sociology, but he doesn't know anything about ADHD. So when they start asking him about ADHD, he says things that are just objectively false. Neil deGrasse Tyson, his profession is astrophysicist. So when he starts talking about politics and all of this is nonsense, he knows it stick to the astrophysicists. One thing's for sure, I now need to monitor more markets and more feeds, yeah. Okay, not to change the subject, but earlier you said footprints don't work, but on your ladders aren't the bid and ask prints like a footprint? Okay, so when I'm talking about footprints don't work, what I specifically am referring to is that on watching is that they try to apply technical analysis to it. It's an attempt to apply technical analysis to order flow. And there are two setups in particular that these guys like. One of them is that on the ladder you see a clear imbalance. So like there was a lot of buying at that price, but not a lot of selling, or vice versa. In which way does it go from there? And they think, oh, well, okay, if there was a lot of buying in that area, then we should move up from there. But actually, again, that's a lot of trade in one spot tends to just cause price to get stuck there. The other one that they talk about is unfinished auctions. So an unfinished auction is basically like a price went bid, but no volume traded there, and they sold it down. So you'll see both buying and selling at that price, but you won't see the buying at the next price above that. They call that an unfinished auction. If it's a finished auction, then you should only see, like right now, there was 31 contracts at 0.5. That means that auction was quote unquote finished, right? And I did just a 1 year back test of that, but I did a 1 year back test of that, and whether the auction was finished or not had absolutely no correlation to whether the move was done or not. It was complete. There was nothing interesting in the statistics about it at all. So, you know, I think that it all comes back to this whole thing that if there is something in the data that really effectively predicts the future, then people catch on to it and start trading off of it, and that changes the signal, and that changes the market and removes it from the market. And so those sorts of things that you're gonna see on like the most common, you know, even though I wouldn't say that footprint is super popular, but it's enough out there, people know about it and everything. Those kinds of simple setups like that are not very likely to be effective. Yeah, I don't believe in unfinished auctions. There's no obligation for price to retrace to that level for it to become, quote, finished. So that's all I was talking about. Because we were scrolling through YouTube looking for videos to pick on. And I'm just not seeing the lady that I thought that I wanted. It wasn't Humbled Trader, but it was like a name that was similar to that somehow said something about humility. Okay, here's one that's called Peachy Investor. Oh, they turned 33,000 into 53,000. See, that's this one simple strategy.
Yeah.
114% win rate. What a load of shit. What a load of shit. I'm gonna pick on that one. Here's one for binary options. I don't even want to touch binary options. But, well, I wouldn't say that there's absolutely no difference between using the footprint on Bookmap or the DOM. It's a matter of taste. I think that there is a significant difference. So the issue, the important behavior that we're looking for that is kind of proven is how the latent liquidity reacts to trade. So what's sitting there on the bid and the ask, it doesn't really matter. What matters is what that bid and that ask does once it starts trading. And when you're looking at the total amount of volume over like a 30-minute period, that's not granular enough. I want to see every time that it ticks up or down, how much did it take? And if there was a one time where there was an iceberg and it traded 5,000 contracts all at once at that one spot, that really matters. Because then what's going to happen is like, okay, 5K traded there, but then what does it trade after that? Does it after that, they're not able to get more than 500 contracts and it just goes back up and down, 100 contracts each way, each time? That's a liquidity hole. That's what we're looking for. And you won't see that on the footprint chart because the footprint chart aggregates it too much. So there is a meaningful difference in us. You know, there's a stylized behavior of markets that we know of and is proven that I don't think there's any way to see other than watching the DOM. Yeah, no person that has an effective algo trading strategy or strategy in general will yield 100% returns and share them. Now, I disagree with that. I think that there are plenty of people that will stumble upon a strategy that's working and share it with people, but it won't continue to work after they share it. Right? But there is something to be said that, like, if you're smart enough to find a real technical strategy that is actually that good, you should probably understand that you don't want to sell it, right? Because in order to figure that sort of stuff out, I think some of these other things like understanding the stylized behaviors of markets and that, you know, what transaction costs happen and how much you might move the market and all of those sorts of things, those are all kind of necessary to making those kinds of strategies work. So I'm really skeptical that somebody would make a really solid algorithm without knowing that stuff. It's more likely that they just kind of stumbled upon something and got lucky. You know, maybe even something that's not really consistent, but it just happened to work really well that year, right? Because that's what ultimately happens is like somebody will trade it. They do really, really well with it that 1 year. And so they say, this strategy works, even if it like never a winning trade with it ever after. Oh, I made 9,000 profit in 1 hour. Oh, come on. Let's see here. If I can come up here, well, let me go back up to the top. Maybe day trading, search, and then filters. Yeah, search filters. This month. What if I switch it to this month? The other thing I want to understand is why does YouTube not send me very many people on the live? Because I see so many lives with lots of people watching and I don't understand what it is about those streams that people would watch. Man, it was like I had it on my phone last night. I was like, I'll remember that name. That's easy to remember. And then I can't find it anymore. mindfully trading. That's it. That's it. I haven't actually watched the video, so I don't know like how but this person had posted a video. It seems like they were doing, yeah, there's a simple step-by-step 6 days ago, and it has 46,000 views already. So for some reason, YouTube is pushing this creator. Wait, you cleaned a binary options dealer once? How did you pull that one off? I can't believe that there are still people out there that are willing to do the binary options thing. Oh, you know what? I probably better get going, huh? Totally forgot what I was doing here. I'm gonna keep the stream going, but I am gonna have to like turn the camera off and the microphone off for this this class. Okay. Well, I'll still be here so you guys can talk and chat and so forth.